Hi there guys, this is Chris Coney speaking. A quick snap stream right now. I'm not going to share my camera. I did just put it on for a second there, but I'm not actually dressed or anything. I didn't have time to prepare for this, so I'm just going to have to jump straight into what happened. So in the Patrons chat group, some of the guys were talking about Ethereum, calling where it would go, where it would stop and so on. I thought I'll just check out Coinigy, see what's cracking. And after I'd picked my jaw up off the floor, I was like, wow, I got to say something about this. So this is Ethereum US dollar on Bitfinex, and right now we are at that my previously mentioned floor of $154.05. So actually, looking at the price right here in the top right hand corner, the price at this minute is actually below that. So remember that I drew my Fibonacci retracement lines back from here. This is the 17th of the 5th, 2017. So that's the 17th of May when this mad bull run began, and then it ended there at the 12th of June when it hit a total high of 412.21. So that was the 100% of the gains, and then the retracement lines, we've almost given back all of those gains now. At this moment in time, we've given back 78.6% of those gains. Now the next floor in terms of Fibonacci retracement analysis is the 100% retracement line, where we would have given all of those gains back. And that would mean going down to 83.77. Wow, that would be low. So if I zoom in a little bit here, looking at the channel, look at this perfectly. The price is perfectly obeying this channel. It's showing almost perfect price cyclicity. So here there's got a phase 1 up to the top of the channel, a phase 2, a phase 1, 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 a phase 2, right? Absolutely superb. Not superb in terms of the price crashing, but in terms of its elegance. So this grey line right here, around about, what did I call it, 83.77. Well, assuming this breaks, which we don't know yet, this is a Sunday, so look at the volume though. I mean, geez, there's a fight going on here. If this breaks, then we might be looking at that cyclicity to continue right down to 83.77. What's the things that are preventing that? Well, the only thing in the way of that, to my mind, there's two things. One is that 78% retracement line, which we are sitting on right now. So that's going to be tested today. And then the only other thing it could get through is the 200-day moving average. Right now, that's sitting at 133. Excuse me. But the thing is, that line is going to extend. And because it's a 200-day moving average, it's very, very slow. So you can see it was rising up here. And as this data has been calculated into the average, it started to flatten out. And then it's starting to curve down again. But because it's an average of the last 200 days worth of data, it's very, very slow. So I've actually been thinking about tweaking my settings for my exponential moving averages, because crypto is so volatile. I just don't know whether a 200-day moving average and a 50-day moving average is going to cut it, because they're lagging indicators anyway. Yeah, they always show what happened in the past. They don't give a clue about what's going to happen in the future. That's the difference between a lagging indicator, which tells you what's happened, and a leading indicator, which tells you or indicates what's going to happen. So speeding these up might help, right? To bring it more in line with the rate at which cryptocurrencies change direction and the velocity and the volatility of them. So what I'm considering here is changing all of my charts and cutting these moving averages in half. That would mean that the green line would turn from a 200-day moving average into a 100-day moving average, and the 50 would turn into a 25. So that would make them less reliable. And what I mean by that is, because they're based on less data, they would be a bit weaker. However, it would make them tighter, and it would give us better signals quicker. You know what I mean? So, like golden crosses and dead crosses, if this 50-day moving average comes back down and crosses the 200, that's a dead cross, and then it's a clear signal of a downtrend. The trouble is, this bear move here, well, it's happening, and the moving averages haven't caught up yet. That's what I mean by the fact that they're too slow. So that's my rationale behind updating the settings. Anyway, that's just something I was thinking about when I saw this crazy perfect price cyclicity to the downside. So yeah, 83.77 would be the next floor if this breaks. So let me just recap what that price was. I'm not changing the settings right now. It was the 78.6% Fibonacci retracement line at $154.05. Right now we're below that. Can it hold below that? We will see. If it does break, there are two bits of support. One would be around $133 thanks to the 200-day moving average, and then the next one below that would be $83.77 at the 100% Fibonacci retracement line. And beyond that, no idea, right? We'd have to look at the way back here to around like the $50 mark when all of this relatively small price movement was going on in April. One thing we could do is look at the depth chart. How do you get the depth chart up on here? I don't know if you can. Oh, here it is. So the depth chart might help us look at this. You can look at the total quantity of Ether that's waiting to be bought and sold to see, but this changes like by the second. So like there's, what we got here? At $151.90, someone wants to buy 132 Ether. So that's a good point. I mean, the visual inspection is probably easier because you can see the big buy walls and where they are. $139, $145. So there's a lot of people waiting to buy at various prices. Whoops, don't want to do that. Click and drag to zoom. I don't really use the depth chart much on Coinigy at the moment. I mean, this is real low level analysis right here. But you can see that, so these are the sellers right here. And what do the sellers, what am I doing here? I can't seem to drag it upwards, but I want to see it further to the right. I don't know how to do that right now because I didn't intend to look at this at this very moment in time. But just from where the price is right now, you can see a lot more buyers ready to support the price as it drops to 151. There's not a lot stopping it from going down to 151. There's more stopping it going down to 145 and even more stopping it going down below 139. But you can keep your eye on the order book. There's someone just come in there, 109 Ether order at 152. There's someone just come in with a 300 Ether order, $151.95. That's not that much really, though, is it? You know, it's not going to, someone could easily come in and take that out. 306 Ether is what? That's like a $46,000 order. So that's not a lot, is it? That could be taken out by one single seller. So that's not particularly much. It's not much protection, that is it? But anyway, that's the situation as I see it right now. I just wanted to do that quick snap live stream to give you my thoughts on it while I were live. So thanks for watching today, guys. I'll see you tomorrow for the next edition of the Cryptoverse. Bye for now.